Good afternoon. I was going to write an article, but you all seem to like the video that I posted on Twitter, and this is actually a lot more convenient and easier for me, so I figured I would do a video instead of a long, medium article that none of you are going to read. So I wanted to address the quote-unquote situation in China, what's happening there with Bitcoin mining and hash rate, and how that has any connection to the sell-off, and what this means for Bitcoin moving forwards. So first of all, I want to add a disclaimer. I am not a miner in China. I don't have any interests in Chinese mining or Bitcoin mining generally. This is a fast-moving situation. I have incomplete information. Most other pundits and people you'll be hearing from have incomplete information, and we're all trying to put it together. And frankly, this video could be out of date in a week or so, just based on how volatile and fast-moving the situation is. That said, I'm gonna, do my best to piece it together and hopefully provide something of value. So I'm gonna give you some context on China first before we start. And I'm not an expert, but I have been looking into the Chinese grid for a while now, primarily because of Bitcoin's exposure to China. So China has a relatively carbon intense grid, which means that your average unit of electricity generated in China accounts for a pretty significant amount of molecules of carbon dioxide and other greenhouse gases relative to sort of the global generic rate. China is actively building dozens of coal power plants. It is a huge consumer and producer of energy, has a gigantic industrial base. In terms of China's actual grid, you have the sort of the core and then the periphery. And the periphery is where a lot of Bitcoin mining occurs. In particular, four major provinces are where the majority of Bitcoin mining occurs in China, although it does fluctuate on a seasonal basis. So in terms of the sort of heavily coal-based provinces, you have Xinjiang and Inner Mongolia, and those have kind of 60 to 70% coal, and then they do have abundant hydro or solar and wind resources. And then in the wet season, which is right now through September, you have Sichuan and Yunnan in southwestern China, where there are unbelievably abundant hydro resources, and hydro is about 90% plus of electricity generation in those provinces. So for context, Yunnan, if it was a country, would, I believe, be the fourth most significant hydropower resource in the world on a country by country basis. So there's a huge amount of hydro in these places. What unites those four provinces I just mentioned is that they don't have huge population centers in them for the most part. The population centers in China are kind of in the southeast, right, and northeast. And so because you have transmission losses with electricity, it's pretty challenging to actually transport that electricity over thousands of miles and get it to those population centers. So China leads the world in terms of energy curtailment, which just means wasted energy, right? Energy which is produced but cannot really be used because there's not a consumer of that energy nearby. And the consequence of this is that there's some really attractive energy resources for miners to go after, and that's part of the reason that there's so much Bitcoin mining in China, is because there's these overabundant and relatively cheap energy resources that we're just simply not making it to the grid, that there was no local demand for. And that's a big part of the reason there was so much Bitcoin mining in China. So China is basically the biggest producer of stranded or curtailed energy in the world. They had a massive overbuild of hydro resources. Lots of Chinese policymakers actually have degrees in hydroelectric engineering, and for whatever reason, they had a huge preference for building these kinds of resources. And Southwest China has some of the largest rivers in the world, tons of dams, and then you get crazy curtailment figures. Like in 2016, Yunnan curtailed something like 30 terawatt hours of hydropower. In 2017, it was around 40 terawatt hours. Bitcoin, by contrast, does anywhere from 100 to 150 terawatt hours of consumption per year. So really material figures. Now, China is aware of this, and they've been integrating their grid. This means building high voltage transmission lines to transport, abundant energy from places where it's cheaply produced to population centers that need that energy, right? So they are trying to integrate the grid and eliminate these stranded pools of energy. So my hypothesis for what's going on relates to this. It may be completely irrelevant to the situation, but I thought I would point it out because that is sort of one of the long-term macro trends happening in the Chinese electricity grid, that they are aggressively trying to integrate the grid and eliminate these stranded pools of energy. Now, China, as we know, has probably the plurality of the world's Bitcoin hash rate. We don't know what the exact number is. Lots of people will tell you that they know. They don't know, right? We have estimates with varying degrees of reliability. We know that the number has been falling as hash rate has been moving west, but we don't know exactly what it is. So if I had to guess, I would say it's between 50 and 70% of Bitcoin hash rate at present. Although it seems likely that that number is going to change. So Bitcoin had this big exposure to China in terms of hash rate being domiciled there. Now, what actually happened recently? Well, in the last week, the States Council on Financial Stability and Development Committee, which is chaired by the Vice Premier Liu He, effectively announced a crackdown, and I quote, on Bitcoin mining and trading behavior to resolutely prevent the transfer of individual risks to society. So it's not entirely clear what this means, and again, that's the issue with someone like me interpreting this. I don't have the full context. I'm not looking at the original subject matter, so you're going to have to take a lot of what I'm saying with a grain of salt and consult, genuine Chinese sources on this. But as far as I can tell, and from, my sources that are sort of on the ground, this looks like the most high-profile announcement of, a crackdown on sort of Bitcoin mining and trading behavior in China that we've historically seen. And of course, we've seen many, many announcements of, the Chinese Communist Party indicating their displeasure with the crypto industry in China many times, and, too many developments to count there. But this looks like the most high-profile, targeted, and direct development. One additional piece of context, China has actually kind of a federated system. Individual provinces have some level of autonomy. So Inner Mongolia, which, as I mentioned earlier, is one of the sort of relatively coal-powered provinces, had already announced a ban on Bitcoin mining in the province. So the remaining one with lots of coal and lots of Bitcoin mining was Xinjiang. So that was already the context. And when that happened, I thought this looks like the start of a trend. And actually, I had been anticipating and looking to see if there would be an expansion of that, prohibition on Bitcoin mining in China. And it kind of looks like that's what we're getting. So we're still early in sort of determining what's happening here, but it does look like Chinese miners are aggressively scouting out alternative domiciles overseas. Now, moving an entire mining farm is not trivial, and securing energy contracts abroad is not a trivial thing, so this won't exactly be an easy undertaking. But it does sound like this is something that they're taking extremely seriously. And of course, the CCP could reverse themselves on this, or they could, abate the significance of the ruling and maybe, allow mining in just the hydro provinces and not the coal provinces, for instance. But either way, from all indications, it sounds like miners are taking this very, very seriously and actively looking towards new energy sources abroad. We don't know exactly where they would go, but Central Asia and Russia seem like good bets. And, the US is obviously, a popular destination, but it's not clear how much capacity there is in the US. So how does this relate to Bitcoin itself, the price of Bitcoin? So as we all know, there's been, some pretty dramatic downside price action in Bitcoin recently. I looked on chain and I noticed that outflows from miner affiliated wallets had really stepped up recently at pretty abnormal and pretty high levels. And if you sanity check this and look and see how it correlates with other previous spikes down in Bitcoin, you see that there's often an associated increase in outflows from miner affiliated wallets. So to me, this looks like some conditional evidence that miner selling is actually genuine and that some miners are selling out either because they want to get out of the business of mining altogether, or kind of more likely they're anticipating a fallow period where they're looking for new territories and looking for new places to locate their equipment. And, that's going to be a expensive and drawn out process. And so they wanted to hedge and, enter into fiat for the duration of that. And so this looks genuine. I mean, this looks like the last and most recent leg of the downturn was really associated with and possibly even led by selling from these entities. And so, it does look to have had a direct impact on price. Of course, you can't discount the fact that perhaps miners or just, regular old speculators were nervous about this ban, which seemed like a really high level ban, or, announcement of more aggressive regulatory action. And maybe they're expecting exchanges to be targeted too. And so people are selling in anticipation of that. That's also, a pretty plausible explanation. But either way, it seems to have certainly affected the price of Bitcoin. Something that I also do expect to happen is maybe we'll see the, onshore Chinese exchanges, OKX and Huobi, come under more scrutiny. We know that the Chinese regime has been kind of harassing executives from these exchanges and sort of detaining them for short periods of time, in the last year or two. So that could certainly be something to look for in the next few months here. So what are the takeaways from all this? As I said, I've been looking forward to a potential ban on Bitcoin mining in China for a number of years now, actually. It's not just last month that I, reiterated that I wanted to see it happen. It's actually, you can find tweets of mine from 2017 saying, I hope China bans Bitcoin mining. And the reason for this is not because I have anything against Chinese Bitcoin miners or anything like that, but it is a fact that there are these provinces that are heavily coal powered where a lot of mining occurs. And of course, it is seasonal. So you have a migration to southwestern China, which is very hydro based in the wet season. But then in the dry season, it's back to coal based mining, right? And, coal is the most carbon intense source of thermal electricity generation. It's pretty much the worst thing you can generate electricity with from a climate perspective. And so, I've been hoping that the narratives around, Bitcoin being mined with Chinese coal would have ultimately be defanged by a ban on mining in China. And so if this, is carried out, and we don't know if it's going to happen or not, but it sort of looks really like it might happen at this point, this would kind of defang that narrative, which, has been really deleterious towards Bitcoin. If you have conversations with some of these institutional and ESG focused allocators, that is something they really are fixated on, even before Elon Musk's comments. So that is one huge negative narrative that would be abated. Now, of course, the climate concerns around Bitcoin are not eliminated because it is no longer mined with Chinese coal, but it's certainly an opportunity for miners to do a little bit of soul searching and realize that they're being hurt by this too because they have exposure to Bitcoin. If you own an ASIC, you have a long-term linkage to Bitcoin. That ASIC is a physical derivative that's paying you out units of Bitcoin over the period in which you depreciate that ASIC, right? And so they're exposed to the price of Bitcoin too. So their best incentive is also to try and eliminate this negative narrative around Bitcoin, and they should really be seeking out cleaner sources of energy too. And so this is an opportunity for a fresh start, frankly. Second of all, if hash rate fully left China, or a majority of Bitcoin hash rate was no longer China based, this would be a dramatic improvement from the perspective of this concern that the CCP was somehow using Bitcoin mining or posed a threat to Bitcoin if they wanted to nationalize mining activities and then perhaps launch an attack on Bitcoin. And this is something that a lot of high-powered macro commentators have mentioned. Even Peter Thiel talked about it recently or implied it was a potential risk factor or a threat. And it's certainly been something that we've dealt with in the Bitcoin community, is folks saying, yeah, Bitcoin can be commandeered by the CCP. And now, personally, I don't think there was ever much credence to this theory. There's a lot of tools that the Bitcoin community has, even if miners turn malicious, right? And the Bitcoin development and technical community has been at odds with miners historically. And it was the Bitcoiners effectively and not the miners that came out ahead in those prior instances. So I do think there were tools if somehow Bitcoin mining was commandeered by a state entity. But nonetheless, it's not a situation I necessarily want to be in, where a plurality or a majority of Bitcoin's hash rate is located in a single country. It's not an externality or a risk that I wanted. And so this would totally abate that. Bitcoin hash rate would flow into other places, Central Asia, Russia, US, potentially even Africa. We know that, Chinese industrialists through the Belt and Road Initiative have lots of linkages to Africa. So that would be kind of a dark horse continent or region to look at in terms of the flow of hash rate out of China. But this would certainly improve the prospects for cleaner US-based mining, which is still, a relatively small portion of Bitcoin hash rate. So either way, it's tremendously positive, both from the ecological narrative perspective and then from the perspective of eliminating this outside risk factor of a state level attack on Bitcoin. If this ban is actually carried out and miners genuinely do leave China, which again, I can't guarantee you that it'll happen. It's a very volatile and fast moving situation. We don't exactly know. But again, miners on the ground seem to be taking it extremely seriously. If this is carried out, it is the biggest hash rate reallocation since industrial mining began in Bitcoin. So it's a tremendous turning point. And in my view, a huge opportunity both for individual miners and for the Bitcoin community to reset these narratives which have been used against Bitcoin. The Bitcoin is mined with Chinese coal narrative, and the Bitcoin is exposed to the risks of the CCP commandeering it narrative. And we have an opportunity to reset both of those and take the data and go to the critics and say, look, what you're saying is now incompatible with reality. So there's enormous positive externalities of the CCP really cracking down on mining in China. Now, of course, the big question a lot of people will have is, well, doesn't this affect the security of the Bitcoin network? And it's a pretty valid question. A lot of people have this idea in their heads that there's a linear relationship between hash power and security, and that as hash rate increases, so does security. And in a kind of very naive sense, this is true, but it's just much more complex than that. My view is that Bitcoin is sort of overwhelmingly secure at its current threshold of energy outlay and security spend and hash rate, and that a reduction of even, say, 50% in hash power, especially a temporary one, wouldn't really impair the security of that network. Bitcoin hash rate almost always increases, but we didn't consider it insecure when its hash rate was 50% lower, a year ago, right? So even if it were to reduce today, I wouldn't consider it insecure. When you look at proof of work coins that have actually been successfully attacked, they have orders of magnitude less security spend, oftentimes virtually nothing, and they tend not to be monopolists on their own hash function. This means that the hardware that you can use to validate or attack the network, it's not exclusively being used for that thing, right? So if you think about GPU mined small proof of work coins, if you use those GPUs to attack those coins, those GPUs still have resale value, right? You can still, sell the GPUs to gamers or use them for something else. You can use them to mine Ethereum. With Bitcoin ASICs, they're only good for mining Bitcoin effectively. So if you use Bitcoin ASICs to attack Bitcoin and, let's say causes a confidence crisis, causes the value of Bitcoin to decline, the value of those ASICs also declines. So Bitcoin is kind of a monopolist on its own hash function, right? So there's never really an incentive for entities that own those ASICs to attack the network. So ASICs provide this enormous security blanket to Bitcoin. And it's, very hard to imagine scenarios where a malicious entity would acquire, an overwhelming percentage of all the ASICs. What this episode is going to demonstrate to us is that Bitcoin hash power is incredibly liquid and sort of porous across international borders, right? As we see this continued dispersion out of China. And I know, the data on this is very low frequency, but we will get more data on this. The pools are actively looking to provide more geographical dispersion data. So as that gets refreshed, we will see, and as this potential crackdown continues, we'll see the dependence on China grow less and less. So to sum up, I suppose, it looks like we're seeing a massive hash rate distribution event, which eliminates one of the key risk factors, either something that people believed in or was genuinely real, which was that a state entity could potentially influence a large share of hash rate. We have this tremendous opportunity for miners to seek out, less carbon intense sources of energy generation. And we certainly can, eliminate this objection that Bitcoin was mined, largely or exclusively with Chinese coal power. That is just not really going to be a valid objection, hopefully, assuming, this crackdown continues. And again, I'm sympathetic to any mining entities that will lose money because of this, but that's of course always the risk of doing business in a communist country which has a command and control economy. Those were the rules of the game. That's what they signed up for, and unfortunately, an unfree market is always going to be risky to do business in, especially one where property rights are not respected. So this is going to benefit miners that have set up in freer market regimes that are politically stable. And of course, the US is one of these. And we see this behavior from US entities. They will seek out politically stable hash rate, which even if it's more expensive, even if those energy sources are more expensive than sort of counterfactual, cheaper energy sources that are in less stable regimes. So it is going to be a huge boon to US-based miners, which is certainly something to celebrate. So that's brief discussion of what's happening right now. Again, I'll repeat the disclosures. I don't have full information on this. I'm myself not a miner. I'm just relying on a patchwork of sources that I've cobbled together from other places, and look at the on-chain data and things like that. But yeah, really interesting and critical time for Bitcoin sort of over the next 12, 24 months.